Hey guys, what's up? It's Lewis here, and today I want to talk about one of the most popular investment strategies that people do to make their money work for them. I'll talk about what it is, why it's effective, and I'm even going to show you how you could sign up to an online brokerage for free and set up your account so that you could start investing today. So a few years back, I decided to switch careers and go into finance. When I decided to make that leap, I went full force into it and read as many books as I possibly could about money. What I learned absolutely astonished me, and it honestly made me so mad that the knowledge that I was acquiring wasn't beat into me at a younger age. Because if it was, I'd probably have, I don't know, hundreds of thousands of dollars more than what I have right now. So to try to help other people, I want to share some of the things that I've learned. And one of the most important things that I've learned is that rich people invest their money.
Thanks, Captain Obvious.
That's pretty obvious, right? Well, yes, it is. But this was not running through my head when I was younger. I really had no thoughts or desire to invest. And truth be told, I was pretty oblivious to it. However, after studying finance for a while, literally all I want to do with my money right now is invest it into assets that I think will give me returns over time. And I mean, that's the whole point of investing.
Because I want to make bank, bro. I want to get ass. I want to drive a Range Rover.
It's so that you can make your money work for you instead of having it sit in a savings account just barely keeping up with inflation. So since investing is so important for building a strong financial future, I figured I should start out with sharing one of the easiest and simplest ways to invest. And the strategy that I'm talking about and I'm going to be talking about in this video is actually called dollar cost averaging. And it's one of the best options for beginner investors that want to put money into the markets but don't have a giant lump sum to invest or don't necessarily want to invest everything all at once. So what exactly is dollar cost averaging? Dollar cost averaging is an investment strategy where you put a set amount of money into an asset or a group of assets at set intervals of time regardless of price. For example, you could put $50 a week into the S&P 500 index fund. You could put $100 a month into Tesla. You could put $50 a week or $25 a week into Bitcoin. You choose the amount of money that you want to automatically invest. You set the time interval to be whatever you want, whether that's every week, every month, every other week, or on a different schedule. And of course, you choose whatever assets you want your money to automatically go into. So why is dollar cost averaging so effective? Well, the main reason why dollar cost averaging is a good strategy is simply because it's an investment strategy that basically anyone can do. When it comes to other investment strategies like lump sum investing, where you put all of your money in at once, most people don't have a huge pile of money to do that. However, most people get paid bi-weekly or on a schedule, and this makes it possible for anyone to invest, even if it's only a small amount, on a consistent basis. This is great for younger people because the earlier you start, the less you have to put in and the greater your returns will be. In fact, people who wait until they're 45 to begin investing need to save 3 times more than what they would have had to save if they just started at 25. So if you're under 25, this is even better news for you. The second reason why dollar cost averaging is a feasible investment strategy is because you can automate the process. You can easily sign up to a brokerage like M1 Finance and set it up so that you will automatically invest into the securities of your choosing. And at the end of this video, I'll walk you through the sign up process step by step. So stick to the end and watch the video the whole way through if you want a tutorial on how to set everything up. It takes under 5 minutes, and once you set it up, you will never have to think about it again. And that's exactly why automating your investments can be so powerful, because with automation, you remove yourself from the process and therefore remove emotions from your strategy. And this is really important because the goal of trading and investing is to buy low and sell high. Everyone knows this, but not many people do it. Why? Because they get scared when prices drop and they don't buy. So remember this: buy when people are fearful and sell when people are greedy. If your investments are set up on autopilot, then you don't have to make that decision to buy when the market is going down and everyone is scared, because it'll happen automatically. As a side note though, if you want to do a little bit of work, you can actually combine the automatic dollar cost averaging strategy with some other investment strategies to actually increase your gains drastically. And if you want to know how to do that, then you could click the link below or somewhere up here to watch that video. With saying that, that strategy is more advanced and requires you to actually look at the markets and manually enter and exit your positions. And to be honest, a lot of people just don't want to do that. So that's why regular dollar cost averaging, it's one of the first options that I talk about, simply because it's so easy and you could automate the process, and it's been proven to be beneficial in the long run. So let's talk numbers. According to Vanguard, if you take a rolling 10-year period from 1926 to 2011 and you spread out a $1 million investment over 12 months, that $1 million using a dollar cost average strategy on average turned into approximately $2,396,000. If you were to put that $1 million in at the beginning of each 10-year period, then on average, it would turn into $2,450,000. So that's $54,000 or a 2.3% difference over 10 years. Personally, for the time and the effort it takes to try to time the market, plus the stress, I feel as if not getting that extra 2.3% is actually worth it, considering the work that you don't have to do and the stress that it saves you from. Another great thing about dollar cost averaging is that if you buy stocks that pay out dividends, then the money that you have invested will be accumulating those payouts and reinvesting them for you automatically, which increases your portfolio value without you having to do anything. If you don't have money in the markets because it's all in cash, then you won't receive any dividend payouts. The fourth reason why I like the dollar cost averaging strategy is because it helps protect you in case of huge swings in the market. And this is very important for me because I primarily trade cryptocurrencies like Bitcoin, which have huge 60 to 80% swings. So by averaging in, I buy more when the price goes down, and this lowers my average buying price and protects me from buying the tops. Right now, the US stock market is on pretty shaky grounds. No one really is too sure of what will happen, and the market has been on its longest bull run in the history of it being actually available. We've had the biggest gains that we've ever had in the past 10 years. And with businesses closing down due to the coronavirus, who knows if the market will crash again or not. If you jump all in right now, you might be entering in near the top. But if you dollar cost average your way in, it doesn't matter if it's the top right now. Saying that, if there happens to be a substantial drop like there was in 2009, then I would say that it would be a good time to go all in. I say this because while I was researching this video, I actually created multiple spreadsheets that compare different investment strategies. And I found that if you would have gotten in on January 1st, 2009 and put in $57,400, then on December 26, 2019, or 10 years later, you'd have $205,961.49. And that's not even including the dividend payouts. Out of that, $148,561.49 would be profit. That's a return of 258.82%. Comparing that with dollar cost averaging $100 in every single week since January 1st, 2009, you'd have $112,620.38, of which $55,220 would be profit before taxes. That's a 96.2% return, which clearly wasn't as good as going in all in near the bottom in 2009. But I mean, what if you went all in 2007, right before the crash? That would be a different story. And that's why I like to average in and also put a lot more in when the price experiences huge drawdowns. So with going over all of that, how do you actually do dollar cost averaging? So to actually dollar cost average, you need a couple things. Firstly, you need a brokerage account to invest into. Personally, I'm using M1 Finance for my long-term dollar cost averaging portfolio. And right now, it's actually offering up to $2,500 when you transfer another brokerage account to M1. And if you invite a friend and they sign up for it, then you get 10 bucks invested into your account. So if you click the link in my description, you'll be able to sign up using my referral code, which would be freaking awesome. And I'll get $10 at literally no cost to you. And then if you refer someone, you'll get $10. So if setting up an automatic investment account seems like a good idea to you, which I think it is, then I would really appreciate it if you used my referral link to sign up. It would help me grow this channel and give out awesome content. Also, obviously, liking and subscribing helps so much. So if you haven't done that yet, you know what to do. Also, just to show you how easy it actually is, I'll show you a recording of me signing up to it and going through the whole process right now. So if you want to, you could even follow along. And one last thing, if you want to do automatic deposits into cryptocurrencies like Bitcoin, I use Cash App for that because I found it to have the cheapest fees. So I'll show you how to do free that as well. Okay, so what I'm gonna do now is sign up for M1 Finance on my phone, and I'll put a screen capture up right here, and then I will simply talk through the steps of what I'm doing in a voiceover. So let's get to it. Okay guys, so the first thing that you want to do is download M1 Finance, and you just go into the App Store, type in M1 Finance, download it, and then you'll be able to open it up. After you open it up, you will simply just click sign up now. I just want to show you right here that it does have the intelligence automation, and that's why I use M1, because the other brokerage accounts, especially like the different apps and stuff like that, they actually don't have the automation, but M1 does, which is why I use it. So just click sign up now, fill out your email and your password. And you have to confirm your email after you register and then set a PIN. So you can see that I did get a confirmation email, and then it goes through the process of what you have to do. Basically, you just create a pie by picking different stocks and different funds, and then it'll automatically diversify it for you. So here, I'll just pick Tesla as one because I really love Tesla. I'm obsessed with Tesla and Elon Musk. I'll also pick Zoom just because, you know, everything is blowing up because of the whole quarantine happening right now. Everyone's using Zoom. And I'll also pick Amazon because, well, Amazon, Jeff Bezos just has so many good ideas, and I really think that they're going to be the leaders for online sales for a long time. And I also want to have a fund in there, so I think I'll just pick the Vanguard Total Stock Market Fund, and I'll just click continue. So you can see that now I have my pie. I have 4 different assets that I'm going to be investing into, and 25% of my deposits will go into each and every one of them. It's really cool, and it tells you how much you would earn if you put $10,000 into the pie just a few years ago. You would make a lot of money. Then what you have to do is you have to verify your identity. So in order to open up an account, you need to verify your identity by getting a text message. So you just put your phone number in there and get the verification code in, and then fill out the standard information like your first name, last name, address, your birthday, your employment status, where you live, your annual income, your total net worth, your liquid net worth, your investing experience, your risk tolerance, your investment horizon, how important liquidity is to you, how you heard about M1 Finance, your social security number, and just a standard security question. Then you just confirm that everything looks good. Then you connect your bank so that you can fund your account. You can instantly connect it by linking your credentials to the app. Then you just make an initial deposit. You gotta make an initial deposit of at least $100, and super easy. You just click confirm deposit, or you can change it up to however much you want to deposit if you want to deposit more. And there you go, you're on your way. That's it. It takes just a few days for the deposit to complete. So you just click continue and build your portfolio, which you already built. So you actually don't need to do that anymore. And the money will automatically be deposited and distributed into the portfolio that you actually put. I do recommend to enable push notifications, so you just allow that. And then you get into the home screen, and so what it looks like, you have your pie that you created. You can add to it, you can do whatever you want. So you can see that's my first pie. You can see I have 4 holdings in it. You can add different stocks to it. You can click on spend and like look at different options that M1 has. I'm not really gonna do any of that. I'm literally just using this to automatically deposit money into my account for the strategy that I talked about in this video. Okay, so I should be all signed up now. Now all I have to do is wait for my funds to actually clear so that they are inside of M1 Finance, and then they will be distributed into the different stocks that I just chose. And once that happens, I'll hop back on the app and I'll show you what it looks like. Okay, so it's been a couple days. I verified my email address and my funds have cleared. So now they're in M1 Finance and they've been distributed into my different stocks that I chose. So once again, I'll screen record my phone and I'll put a little thing up right here, and we'll walk through the app together. So my funds have cleared, and I saw that they cleared because I saw that my account is now funded. And if you click on your pie, it comes up with this awesome pie graph and some information underneath. So you could see the 4 different stocks that I chose before, and then also the S&P 500, which I said that I added in afterwards. And if you look at the dollar signs, I roughly have $25 in each account. And that's because when I put my initial $100 deposit in, it got divided into the 4 different assets evenly, $25 each. But I did end up changing the percent of my deposit that I want to go into each individual stock. So I'm gonna show you how to do that right now. It's super easy. All you have to do is click on Manage Pie and click on Edit Pie. And you can see that I changed the percentage that my deposits go into each individual stock differently. So I put Tesla, I put 50% of my deposits are gonna go into that, and 20% is gonna go into SPY, and 15% Amazon, et cetera, et cetera. You can also add to your pie, and this is what I was talking about before. I added SPY, or the S&P 500, to my account by clicking the little plus arrow above and then simply adding it that way. It's super easy. So now I have 5 different stocks or assets that I will be depositing in every single time that my money gets deposited into my M1 Finance account. And to change up what percentage you want your deposits to go into, you could simply just click on the little percentage and change it to whatever you want. As long as it all adds up to 100%, then you'll be good and everything will happen automatically for you. You could also go into the details of your pie and edit the name of it. So right now you see that this says my first pie. You could change that to whatever you want. So I'll just change this to my long-term portfolio, save that, and you can also change the description of it, which is really cool. So I'll just add underneath the default description, which is the pie you created during sign up, to depositing into this account every week automatically. And that'll help remind me when I go into this account just exactly what it's doing. You also have a couple more details that you can see on the screen, such as how many holdings you have in this particular pie, expenses, and your dividend yields, which is actually super important. And now here's a really important feature. If you just swipe up on the little handle at the bottom, you'll see that it says auto invest is set to on. That says that all cash is automatically invested. And you want to make sure that that's set to on so that when your money does get deposited into your M1 Finance account, it will be automatically deposited. And if you click on learn more, you can actually learn more about it. And you can also read more in-depth articles on it. Finally, the most important thing is that your M1 Finance account is actually getting money deposited into it on a recurring schedule from your bank, because money won't be invested into your account if it's not coming from your actual bank. So what you need to do is go to your bank account, and then you click on deposit, and then you go to switch to a recurring schedule. Once you do that, you have to select the frequency. So this could be monthly, week of the month, every week, or bi-weekly. So I'll choose weekly, and then you get to choose what day you want your money to be deposited. So I'll just choose Monday, and then you choose how much you want it to be deposited into your M1 Finance account every single week. So for me, right now, I'll put 25 bucks. And I'll probably up it up to 100 bucks pretty soon. And then you just click schedule, and now money will be coming from your bank into M1 Finance, and then the money in M1 Finance will be distributed into the different stocks that you chose in your pie. So you just confirm the schedule and you're good to go. So all you need to do is head over to the website and log in with your credentials. You'll get the dashboard, then head up to transfers, and you will be able to see your schedules right there. And if you want to edit them, you can simply just click on it. And once you do that, you'll see you'll have the option to edit it a little bit more. And that's pretty much how it's done. Okay, that's about it. So just to recap, dollar cost averaging is an incredibly easy and simple way to automatically invest your money. Because it's so easy, it's perfect for beginners who want to get started with investing. And because it doesn't require a lump sum, it's perfect for people who get paid on a bi-weekly basis. And because it protects you in the case of a market crash, it's perfect for those looking for a lower risk investment strategy. And to dollar cost average automatically, simply sign up for a brokerage that allows automatic payments and set it up on the app or online. And I do want to say that at this time, Robinhood and Webull currently don't offer this feature, which is why I use M1 Finance as the brokerage, and that's the brokerage that I recommend if you want things to be done automatically and easy. And that's pretty much going to do it for this video. I hope you enjoyed. And once again, for that more advanced strategy, you can click on the link below in the description and see that one. Anyway, you're awesome. Stay awesome. I'll see you in the next video. Peace out.